One of the most popular searches on Google right now is housing market crash. The housing market is definitely shifting, but for a number of reasons, it's not headed for a crash. One reason that a lot of people aren't talking about is that the market has a parking brake on it. A recent Consumer Affairs study found that 78% of Americans believe that a real estate crash is coming. It's understandable considering all of the gloom and doom headlines that are out there and the sensationalism in reporting. But I'm here to tell you the numbers don't back it up, and I'm kind of surprised that more people don't realize this. You've heard me talk about this before in recent videos, but the real estate market outlook is a simple supply and demand equation. Right now, we still have low supply, and demand has actually been slightly reduced by the rising interest rates. Yes, the pendulum is switching a little bit and swinging toward the buyers, but it is still a seller's market right now. Inventory nationally is just under 3 months of inventory, which is a seller's market. Here in the Twin Cities, it's actually about 1.2 months of supply, which is an extreme seller's market. Not quite what it was just a few months ago, but nowhere near normal. How does this equation change? A flood of inventory to the market. And there are a couple big reasons why I don't see a flood of inventory coming. Number one, defaults are way down. If you look at the chart beside me here, you'll see that defaults in 2022 are 1/10 of what they were in the first half of 2010, and they're actually about half of what they were in 2018. Now, some of these numbers are actually affected by the CARES Act and the impact of the forbearance break that people were given on their mortgage payments. Most people who were in forbearance have now come out of forbearance safely, and we're not seeing the flood of foreclosures that a lot of people were expecting. Now, the second factor is something that I hear almost nobody talking about, which is interest rates. Unless you've been living under a rock, you know that interest rates have risen sharply over the last 6 months. At the end of 2021, you could get a mortgage interest rate under 3%. Right now, just about everybody is paying well over 5% for a loan. So if you have a mortgage that is under 3%, you're not going anywhere. And I'm included in that number. I got a wonderful rate when I bought last year, and unless I have to move, I'm not moving because I can't afford as much of a house as I would have last year for the same money. Let's dig into the numbers and figure out what sort of an impact this segment of the market might have. Well, there are approximately 81 million owner-occupied homes in America. 38% of the owners of those homes own those homes free and clear. They have no mortgage. They own the home outright. That leaves about 50 million homes in America with a mortgage on them. And of those 50 million homes, just about half, 25 million homes, have mortgage rates of under 4%. Since we're looking at current rates in the 5s, it would be kind of counterintuitive for somebody to make a move unless they had to. So most of those people have the parking brake on. They're sitting still. They're waiting for mortgage rates to change in order to make a move, unless they have to. So let's just say that mortgage interest rates go back down and this portion of the market mobilizes. Does that create a flood to the market? There might be some more inventory, but they're still looking to buy someplace else. And it brings other buyers off the bench who have been waiting for mortgage interest rates to go down so that they can afford more houses as well. So I don't see this bringing additional inventory to the market, even if the market dynamics change dramatically. It's pretty obvious that buyers and sellers are looking for two different outcomes. Buyers, they'd love to see prices go down. Sellers, they'd love to see prices continue to rise in this crazy rate that they have the last few years. In reality, it's probably somewhere in the middle. Most real estate economists are expecting prices to increase over the next 24 to 36 months at a slower rate than they have in recent years. If you are looking to buy or sell a home, or just want to know a little bit more about what's going on in today's market, let's connect.